Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it breakout or fake out. So we had a big move in the semiconductors this week. We had that big move in Nvidia. I talked about Nvidia last week, and I'll give an update on it. And I think it continues to look very much like an Elliott Wave flat, and we'll talk about it. So we'll look at that. I'm going to focus on the NDX, the Nasdaq 100 this week, and then do the update on Nvidia, take a look at Marvell, and that should be pretty much it. But I'm going to start off here with the ETF Dashboard, and let's take a look at what's going on this last week. I had 16 sectors that I track on a weekly basis in here, and we got the 11 S&P 500 and then several subsectors. 4 of the sectors were up, 12 were down, a little deterioration from last week where we had 10 up, 5 down, 1 no change. The leader to the downside, consumer staples, which was kind of interesting that, you had this overall weakness, but yet the consumer staples, which is kind of a risk-off type of move to move into consumer staples, it was the leader to the downside. So we're getting a lot of mixed signals right now. The leader to the upside, naturally, semiconductors. Look at this move, 10.5%, given what happened this last week, and now up 45% on the year here, 4.5 months into the year. That's pretty incredible. It reminds me of what energy was doing last year. So, and speaking of energy, it is the leader to the downside, down 10%. So that is the picture we've got on the S&P sectors. And when we look at the S&P, all of my 16 sectors actually, when we look at the index ETFs, the Dow was the most negative, down 1%, and the Nasdaq 100 up 3.5%. We also have the transportation average. I use IYT because there is no transports ETF other than this one that I'm aware of. It was in the red also. So the Dow is negative on the year, the Nasdaq 100 up 30.4%. Okay, that is just a couple sections of my ETF dashboard. Here's the side-by-side view. So here we're showing the Dow Industrials, the S&P 500, and the Nasdaq 100. So the Dow was down 333 points in here. So we broke down below the trading of the last 7 weeks, 2, 4, 6, 7 weeks. And then we came back. So, the bulls tried to come back in the end. And on an intraday basis, we actually broke the trend line on Thursday. So it's going to be interesting to see if we get any kind of continuation this following week. The S&P 500 was up 13.5 points for the week. 13.5 when you round it in here. So a little bit of continued movement to the upside. And then you get this big, strong continuation move. We had a strong move the previous week, and then this last week up 495 points on the Nasdaq 100. I've talked about how, compression and expansion, and then the market just cycles. Remember, we had this very compressed week in here, the trading range I'm talking about, 234 points. And now look at the expansion between high and low, 808 points. Huge move. And we are overbought. And we're going to take a look at this in a minute. So let's I'll come back to that. So let's take a look at the side-by-side of the industrials and the transports. Again, the Dow was down 333 points. The transports were down 6 on the week. Now, they continue to be, these last 4 weeks, continue to be within the range of the week of April 23rd. So we really haven't gotten a continuation of the breakdown in here, but it sure looks like it's ready at any moment to break through this trend line and continue to move. I mean, it looks like it is leading the Dow down. So that's the picture between the industrials and the transports right now. All right, let's take a look at the Nasdaq 100. All right, let me go back to the home screen here. Here's the Nasdaq 100. Here's that weekly picture I just talked about. Let me get over here and take a look at this. So when I look at the retracement of this entire move from November of 21 to October of 22, The high of this last week is almost exactly to a 61.8% retracement level. Okay, big, beautiful, deep retracement for a wave two, which is exactly what you're looking for. Okay, so, this is the picture. And I tell you what, let me go back and let me show the daily view, and then I'll go to the Qs, and I'm going to show the Elliott Wave on the Qs. So here's what's happening with the daily view. So right now, we've got a potential divergence developed. We're right there. Now, it may disappear on Tuesday. Remember, the market's closed on Monday for Memorial Day here in the United States. So right now, we've got divergence between the close on May 18th and the close that happened on Friday. Now, it's not showing up here on DI+. So this is kind of interesting where we're at. And, I talked about, did I mention this? I think I did. The fact that we are severely overbought here. We are the most overbought on a weekly basis since November of 21. Okay, so all of this, big moves that we've had in here we are sitting at the top of, intermediate wave two. And I want to go right here. Here's what I'm talking about. So the move coming off that October low, I believe, is a double zigzag. ABC, WX, and then another corrective pattern, ABC, for the second zigzag pattern. And here we are with the high at 61.8%. So when you look at the daily view and drill down in here, when you have an ABC, you're looking for a 5 and a corrective pattern connecting wave in here. Again, a B wave can be just about anything. It can be a zigzag, it can be a flat, it can be anything. It can get messy, but many times it's just a simple little 3 wave. Okay, so we've got a connecting wave, and then you look for a 5 wave move for the C wave. The 5 wave move can either be an impulse or an ending diagonal. In this case, it sure looks like an impulse wave, and it sure looks to me like we have our 5 waves. And we just got our 5th wave with the move on Thursday, Friday, thanks to Nvidia. And again, a little bit of the divergence that's developed, at least as of Friday. So interesting pattern, interesting place where we sit right now. Now, we've got to see the price action roll over, right? We've got to see, if you're looking for this to head south like I am, okay, you got to see the price action roll over and break down. And it hasn't done it yet, but right now when I look at the wave count and where we're at on the deep retracements, you got to sit back and say we're right in that zone, in that area. We've gone beyond the 4th wave of 1 lower degree right here. Okay, many times this is a target for the next corrective wave, and we've gone beyond that, and we're sitting at the 61.8% retracement. Okay, enough on the Nasdaq 100. I want to show you an interesting tweet I came across. Let me pull it up right here. AI is real. This is a tweet. Jesse Felder retweeted this for a quote from Fred Hickey. I think he put out a post about gold and how he thinks that the conditions are really ripe for gold. But his comment about AI was interesting. It's real. It's with us, and it has been for decades. Forbes magazine had a cover story on the coming glory of AI in 1998. So this isn't anything new. It's just a rationalization to pay ridiculous multiples for a small number of stocks. And I got to say, I really agree with him, because the AI frenzy that's been going on has been pretty crazy and ridiculous. And when you see what some of these, like when Microsoft had their conference call after earnings, I think they counted like 55 times they mentioned the word AI, as if they didn't know that this was really, really sensitive to the analysts. Okay, so what am I looking for? I am looking for Nvidia. I've got it down here in my list. And this is really an update of last week, okay? So here we were last week where we closed the previous week. And I talked about how I said, it looks to me like we had a flat. I had this, I had the word flat on here. And now it looks like an expanded flat. Why? Because the B wave has gone above the beginning of the A wave. And when you're in a corrective pattern like this, it can do that. Okay, so that's why you got to look at this and go, okay, fake out or breakout. All right. And, you know, when I look at the C waves in a flat, in an ABC, you know, or the B wave, I'm sorry, let's just look at this, A, B, C. The B wave, the first target I have is 100% where it equals A. Okay. The next target I have is 138.2% if this continues to push. And yeah, we are at a very, very deep extreme. Look how overbought we are on the RSI. And again, I use a 10-bar RSI in here, 90.7, okay? Up in that neighborhood as to where we were back over here in November of 21. Okay, so very, very close. So pretty interesting picture. And I think it's definitely getting extended. But again, we need to see it come over, roll over and break down. We'll see what we get over the coming weeks here in NVIDIA. Okay, so that is the picture there. And the other one that caught my eye is Marvell Technology, or Marvell Technologies, I think is how they pronounce it. Let me pull that up. So here's Marvell Technologies, up $20.05 on the week. Explosion frenzy. Why? Because, oh, hey, don't forget about us. We got AI too. And let's just see what kind of retracement we're talking about here from December of 21 to the low in here. Well, we got a little bit above 61.8%. So yeah, it's a heck of a move that's happened in here, well above the Keltner channels, extremely overbought, back into the neighborhood that happened when it was peaking at the end of 21. So the other tweet that I came across that I thought was fairly fitting in here, especially given this AI craze, is this quote. He said this quote of the day. I think I'd almost put it as quote of the week. Only two things are infinite, the universe and human stupidity, and I'm not sure about the former, Albert Einstein. Okay, that's it for this week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week, and remember the market is closed until Tuesday.